Most people think they're bad with money. Truth is, they were never taught this one rule: assets and liabilities. Two simple words that decide whether you build wealth or stay stuck forever. In 2026, this difference matters more than ever because inflation is real, jobs are unstable, and bad financial decisions get punished fast. Today, I'll break down the best assets and the worst liabilities so you can stop guessing and start building real wealth. What most people get wrong. Here's the biggest lie society teaches you. If it looks successful, it must be an asset. New car, big house, latest gadgets, looks rich, but silently drains your bank account. Rich people don't ask, does this make me look successful? They ask, does this put money in my pocket or take it out? That's the only rule that matters. What is an asset? An asset is anything that puts money into your pocket or grows in value over time with or without your daily effort. Simple. If it pays you, it's an asset. If it costs you, it's a liability. Now, let's talk about the best assets in 2026. Best assets to own in 2026. 1. Cash flow businesses. This is king. Not stocks, not crypto, cash flow. Examples: online service businesses, agencies, subscription models, small local businesses, digital products. Why it's powerful in 2026? You control pricing. Income adjusts with inflation, not dependent on one employer. If the dollar weakens, business owners raise prices. Employees suffer, owners adapt. 2. High-income skills. This is the most underrated asset. Skills like AI and automation, coding, data analysis, sales and marketing, content creation. Skills can't be taken by governments, work globally, pay in strong currencies. In 2026, your skill set matters more than your degree. Skills equals portable wealth. 3. Real estate selective. Real estate still works, but only if it pays you. Good real estate, rental income, positive cash flow, good location. Bad real estate, empty houses, negative cash flow, bought for ego. Real estate is an asset only when it produces income, otherwise it's an expensive liability. 4. Stocks and index funds. Not day trading, not gambling, long-term ownership. Best options: index funds, dividend stocks, global exposure. Stocks are slow, boring, but they quietly compound wealth while you sleep. 5. Gold and Bitcoin, limited. These are hedges, not foundations. Gold protects purchasing power, doesn't make you rich. Bitcoin, high risk, high volatility, small allocation only. These assets protect wealth, they don't replace income. Worst liabilities destroying wealth, 2026. 1. Depreciating cars, the biggest silent killer. The moment you buy a new car, value drops, insurance costs, maintenance costs. Unless the car makes you money, it's a liability pretending to be success. 2. Bad debt, credit card debt, buy now, pay later, high interest loans. This debt grows while you sleep, traps your future income. Good debt builds assets, bad debt builds stress. 3. Lifestyle inflation. More money comes in, expenses rise instantly. Bigger apartment, more subscriptions, more useless upgrades. Income goes up, freedom stays the same. This is how high earners stay broke. 4. Buying status. Designer clothes, luxury gadgets, expensive habits. Status doesn't pay dividends. Ego doesn't compound. Wealth is quiet. Broke is loud. Final mindset shift. Ask this before every purchase. Will this pay me or cost me? That one question will change your financial future. Assets build freedom. Liabilities build chains. Most people don't need more money. They need better decisions. Start stacking assets, cut liabilities, and let time do the heavy lifting. If this helped you, like the video, subscribe, and comment What asset are you building in 2026? I'll see you in the next one.